All right, cool. Hi, Nazmi. How you doing, brother? What's up, Easy? Hello, Keela. How you guys doing? All right, let's take a look. Let's make a plan for the week. First, I want to look at the calendar, see what we have this week. Let's turn on the orange folder as well. Perfect, perfect, perfect. All right, so tomorrow, no news. Tuesday, CPI, which should be eventful. And in the afternoon, bond auctions. Probably gonna have an afternoon volatility as well because of bond auctions. Wednesday, same deal, bond auctions at 1 p.m. Thursday, PPI, retail sales. I think Thursday will be good as well. And on Friday, we have more red folder news. All right, beautiful. So I'm not too concerned about Monday tomorrow, for the fact that there's no news whatsoever. But I'm still expecting volatility tomorrow. So for me, no news Monday doesn't mean much, just because I'm looking at the price action and it seems like we are just building a market maker sell model considering Friday's close and Friday's price action. So on the daily, we still don't have a dealing range. However, I believe um, I believe Friday's high will be a swing high going into Monday. So my framework will be in this price action. There's the order block right there on Nasdaq, and order block right back here on ES. So I'll be looking at that dealing range as my framework on the higher time frame. Because, like I said, I believe Friday's high will be our swing high for a while, and this is probably going to be my higher time frame framework dealing range on ES. Now let's get down to 4 hour, which is the fun part. This is the time frame I'm expecting or anticipating the market maker sell model. Okay, so hold on, let's do this. Current interval only. Same deal on ES, so I'll be cleaner on the lower time frames. And my computer is so laggy because of OBS. Alright. So on Friday, Nasdaq rated the high. ES already did that before, like on Thursday or something. So I actually did not anticipate that sweep on Nasdaq. I would have rather seen Nasdaq staying below it and creating an SMT divergence between ES. However, there is an SMT divergence present with YM, so I'm taking that into consideration for the SMT divergence. So for me, this price action is a smart money reversal on the 4 hourly chart, which is big, because it's 4 hourly chart. I believe we're going to be seeing like 200, 300 range distributions to the lower side or the south side, right? So this is what I'm anticipating on this specific time frame. Now, because we have engineered liquidity here, which I mentioned earlier this week, right there. So this low on Tuesday is engineered liquidity. So price should be drawn into the actual liquidity pool, which is south side from Thursday, February 29th to 2 a.m. Candles low should be an easy target for Nasdaq. I'm gonna mark it as easy sell side. Earlier this week, I'm expecting, in fact, tomorrow, I'm expecting that sell side to get rated. As of now, it looks like we are in low risk sell stage of the market maker sell model on Nasdaq, and there is an order block here which I'm expecting to be confirmed. Now the question is how much this can distribute overnight today. That's the question. So I mean, ideally, because it's going to be this low resistance liquidity run, I'm expecting Asia and London rating the sell side before New York open. But ideally, I don't want to see that because I want to trade this, obviously. But we'll see. As of now, though, I'm anticipating the candle on Friday, 2 o'clock, 4 hourly candle as an order block. So that means anything above above that candle, like this fair value gap, for example, I'm anticipating that as a breakaway gap. It is not confirmed yet, but that's what I want to see because if it leaves it open, that means the move is strong and the move is low resistance liquidity run as expected. Now, let me build um, let me build the stages of the sell model that I want to see, like the lower sell, first stage distribution, second stage redistribution. So this is what I'm thinking on Nasdaq. Nasdaq will probably raid the sell side today or tomorrow during New York, and that'll complete the low risk sell stage of the market maker model. Now, if you take a look at the price below that sell side, we have couple CBs there. This is a BPR. So I'm expecting it distributing all the way down to this fair value gap, and potentially maybe it might also IOFED in the lower one. Either or is very likely, which also will complete the low risk sell stage of the market maker sell model on the 4 hourly. Now after that, after rating the sell side into this fair value gap or the lower one, I think we're gonna have a couple up close candles to form an order block around these areas going into Tuesday. Might have a little run, right? Creating an order block. So this pullback after sell side will form a 4 hourly order block. Now that will set the stage for the first stage distribution in the market maker sell model. So after that, going to Wednesday, Thursday, I'm expecting that order block will keep price below it, and it's gonna just keep distributing lower. It's gonna be step by step, obviously. It's not gonna just distribute like 500, 600 points, obviously. So the first stage distribution will be probably like CE of the fair value gap from February 21st, and then it's gonna create another pullback and set the stage for the second stage redistribution. Now that's the price action you want to be trading in. Second stage redistribution. Why? Because it is going to be the fastest delivery. Meaning, once it prints an order block here, some up close candles, maybe consolidation or something, that'll keep price below it, right? Once it's there, once you have a lower time frame confirmation from those order blocks, now you're in a second stage redistribution, which will probably deliver within one or two candles, just like this one right there. On Friday, we've seen that. And the second stage redistribution will probably reach down into daily sell side, which is also the daily order block. Now that'll shift the sentiment in the market, meaning we'll probably be in a pullback on the higher time frame perspective. So I'm expecting this week being very volatile and rather cleaner than the previous weeks. But there's also one more thing to mention about this week. So this week, the March contract on indices will be expired on Friday, meaning this week is a rollover week. We'll be rolling over to June contracts, and in these weeks we usually have weird price action on the lower time frames. For example, March contracts will be rating liquidity, but June contracts are not going to do that kind of thing, you know. And because of that, I recommend all of you to be conservative with your partials, with your targets. And the second thing is daylight saving will be so daylight saving is actually today, I believe. We'll be moving time 1 hour earlier, I believe, if I'm not mistaken. That might also fuck up a couple things in the intraday perspective. So be mindful of that going into this week, at least earlier this week. So Monday, um, just be more conservative on Monday and Tuesday. After that, Wednesday, Thursday, Friday, that it should become cleaner because the open interest in the new contracts and the volume in the new contracts, June contracts will be larger than March. Um, so the price action will be cleaner. Now on ES, so hold on a second. Let me build that framework here. So this is my original consolidation. I'm considering all this price action here as a smart money reversal just because we have SMT divergence at highs with the YM. On ES, it's the same deal. ES is rather stronger, but there's a similar price action on the hourly, on the 4 hourly chart on ES as well. So this low and this low is the engineered liquidity, and this low is the actual liquidity pool. Because of that, the sell side from February 29th, Thursday, 2 a.m. Candle should be the easy target for ES, which comes at 5,060 level on ES. I'm expecting lowest sell stage of the market maker sell model should complete down there before giving any major pullbacks. That means the up close candle prior Friday 2 p.m. candle should be act as an order block as well. I don't want to see price going higher than that candle at all. The most it should go is CE of the wick, which is at 5,143.75. As long as it stays below overnight, it should be ready to go to the downside. Same thing on Nasdaq. On the 1 hour chart, let's take a look at the 1 hour. So going into this week, guys, because the market maker sound model is on the 4 hour chart, my main framework will be there, and I'll be making myself aware of its PD arrays. Okay, that is important. So same look on the hourly chart. This up close candle from Friday should be an order block. It is not confirmed yet, but I believe overnight it's just going to distribute. Maybe you'll see a couple consecutive down close candles confirming Friday's 2 p.m. candle as an order block on the hourly chart. And the first target should be 17,826 for Nasdaq, and for ES it should be 5,060. Now, I forgot to mention how further can this go on ES. I believe one of these fair value gaps will cause a resistant support here and cause a pullback on ES. And I'll consider, or you should be considering that pullback as an opportunity to anticipate a 4 hourly order block. Okay, guys, that is important. Then later on, we'll be using those order blocks for the order flow. Okay. As of now, though, this is my POI. I'm anticipating this as an order block. It is not confirmed, but I'm anticipating that as an order block. So what could happen is, in the event of price retracing into the hourly order block, you'll probably see a market maker sell model forming on the lower time frames there, on the 1 hour, on the 1 minute or 5 minute. Same thing on ES. On the 15 minute, I'm not too concerned about the 15-minute PD arrays at the moment because we have the model on the higher time frames. But it's the same deal, you know. The hourly order block is going to be an order block on 15-minute as well because time is fractal. For the framework, I forgot to mention. So initially, before or by the time the low risk sell stage of the sell model completes, the main framework I'll be dealing with is going to be the low from Thursday 29th of February all the way to high from Friday. This is going to be my first framework. Okay, guys. And then later on, after the easy sell side is taken out, I'll be changing my framework. It's going to be, it depends on the price action here, from order block high somewhere here to all the way down to February 21st candle low, or even the daily dealing range could be the potential dealing range framework. Because at the end of the day, this is, hold on, let me zoom out a little bit. This is the cell model, cell models framework, right? Smart money reversal, original consolidation, a dealing range from SMT, SMR to original consolidation, right? This is the framework. Now, if you look at the easy sell side target, the first target, it is at EQ and below the BPR at discount. That is why I'm expecting a major pullback or the first major pullback from that level. Now, that pullback will definitely be tradable in the intraday perspective, but ideally, you should be waiting for a lower time frame shift after that pullback. So you should be waiting for I don't know, like that pullback to be completed first, because it's going to be a high resistance liquidity run, that pullback in the lower time frame, and then the real move will come. And you should want to be, you know, participating in the later move, the actual move, if you want to stay safe. Any questions about indices before I move on to you know, the other assets like forex and stuff? By the way, Crypto Fares, are you still here? Yeah, sure. Um, you should be attending my class tomorrow because I'll be covering SMT divergences in that class. Just an FYI. If there are no questions, I'm jumping on to Forex, Euro USD, and GBP. Now I'm excited for this price action because now we're going to be seeing clean price action, fast market, volatile market. It's going to be one-sided, low resistance to ground. Because you remember the class of liquidity. Remember the high resistance, low resistance, liquidity run concepts. The moment Nasdaq loses the range, this is the range, okay? The moment Nasdaq loses that range, it's going to be even faster, okay? The the most it could do is after breaking that range, is pulling back into range low, which is essentially creating an order block here on the in the pullback leg, and then keep going lower in the form of low resistance liquidity. If you're swinging, you know, you can target the daily low in my opinion, which is at 17,221. Or if you're trading options, you can trade QQQ put options. But anyways, let's jump on. You know what? I'll actually after this session. Okay, let's do that way. After this session, I'm gonna post the charts as I annotated here in my channel, so you guys can have access to it as well whenever you want on demand, instead of watching the videos entirely. 4-hourly PD array, 1-hourly PD array in the market maker cell model. Yes, because the market maker model is formed on those time frames. You'll be using the relative PD arrays along with lower time frame market maker models. Meaning the moment, for example here, let me put it this way, hold on. I'm going down to hourly chart, okay? Now the hourly chart, this is the easiest target. Why? Because the original consolidation is there, right? This is the original consolidation, smart money reversal, SMT at highs with YM. So the sell model on the hourly, this is your framework, right? Now you pull the dealing range, and then because the sell model is on the hourly, now you look at the hourly time frame PD arrays. For example, there's one fair value gap, the second fair value gap, right? Once price trades into that fair value gap on this time frame, now you should go back down to a lower time frame. For example, let's go down to, I'm gonna replay this so you can see it better. Let's go down to 1 minute. H1 PD array, okay? Now let's take a look at the same price on the 1 minute on the 1 minute perspective. Now what you see here is using H. This is the combination of multi-time frame analysis. Hourly price action, hourly candle is retracing or testing its PD array, right? And the 1 minute time frame, it looks like a distribution, right? What you need to do is, because you know the hourly time frame, there is a market maker sell model. Now you have to wait for a potential market maker sell model on the 1 minute so that you'll know the pullback is completed. Now in this case, that's what happened on Friday. If you look at these highs here, after market tested the H1 PD array, it formed an SMT divergence at the highs with the ES here, and then it sold off because this is creating the lower time frame sell model. That's how you combine different time frames. But don't worry about it. Now this can sound a bit confusing for you, but I'll be diving into these things in classes, in the market maker model classes. And the first part of the market maker class will be tomorrow, so I'm diving into that. It'll be in different parts, so there'll be it's kind of gonna be like series part one, two, three. Hopefully, we'll go in more depth of the market maker model. I don't know if you use deviations, but using the Friday news manipulation, we can project the market maker sell model on the 4 hour. I don't use it because for me, on the 4 hour, you said, right? Okay. For me, if I take a look at this price action on the 4 hour, hold on, let me cancel the replay. I can see the original consolidation like super easily. Because of that, I don't necessarily use the standard deviation. But if it wasn't as clean as I wanted it to be, and say if I'm still bearish though in the directional bias, then maybe I could use the standard deviations. Because personally, I like to keep things simple. The less I put on the chart, the better. That's why. But there's nothing wrong with using standard deviations, obviously. Especially if you're having a hard time spotting original consolidations. Obviously, standard deviations will be your go-to. Am I the only one who is having the feeling of likelihood of price getting to EQ to continue higher? Possible. We'll see. That's why I'm telling you, like, you're going to be trading step by step. If after price hits, so the EQ is here. So this is what you're going to do because you'll be trading step by step. After price trades into an equilibrium or a discount, right? In the pullback, it's going to form the order block, right? And then it's going to test the EQ one more time. After that test, if it's violate the order block, then yeah, you can say it might go higher. That's why you're going to be trading step by step. All right, let's go on to Forex currencies. Their forward plans wait for 4 hour PDR and frame within. Yes, 4 hour. Yeah, exactly. Wait for 4 hourly PDR or hourly. It's going to be fractal. Same thing because 4 hourly. So this is the 4 hour order block, anticipated or implied order block. Now take a look at the same price action on the hourly chart. Do you see that? That's the order block on the hourly. It's the same thing. It's the same time as fractal. You're going to be seeing the same price action on every time frame, if that makes sense. How high are you expecting London to rate up tomorrow before they dump? This is the thing. Like, I can't predict the precise level because it could be. Here's the thing. Let me put the midline of the order block here. So two things can really happen. Okay. First, actually three. There's a rejection block here. What it could do is it could just distribute a bit lower, confirms the order block, right? And then for the pullback, it could either test the order block low or main threshold, or even it could come all the way up to rejection block. I cannot predict that. That's why lower time frame confirmation is highly important. It could be either or. Three options here. But the main point is, as long as it does not violate the order block, That's your main concern. If it does, that's the problem. That's when things become complicated. Because if it violates this order block here, what you need to do is, if you're still bearish bias, directional bias, now you'll require an SMT divergence at these highs here with the S or YM. Otherwise, you're wrong, or your bias is wrong. All right, let's take a look at the currencies. I believe they had a great week today, this last week, in Euro and GU. I haven't deleted my drawings. Okay, it's like I've been talking about this quite some time now. I think it's been 2 weeks already. Currencies are in. I'll delete all that. The currencies are in a buy model at the moment. This is the smart money reversal because there is an SMT at the lows. Original consolidation. This should be the easiest target for Euro USD. And I believe, like I mentioned earlier, a couple of weeks ago, I believe Euro's drawn liquidity is this target, which is at 1.099. It's not going to stop until it takes out this buy side. Now, if you look at the GU, GBP USD, same level, original consolidation high is already taken out. Now there's an SMT divergence at the highs. I believe Euro will have one more push and stay below the actual high, and then it could consolidate here a little bit before giving another expansion either to the upside or to the downside. And the reason I did not mention this high in the first place is because this is not a high probability target. Now it could rate that high or not. It'll depend on how price knocks out the original consolidation. Okay, that's the thing. And again, I'll teach this and give you the reasons behind it in the market maker model classes. On the 4 hourly chart, this is the original consolidation. It looks cleaner. It seems like I'll delete all this stuff. Here's the ugly price action on currencies. This is bad. That's why I don't trade this asset class. Accumulation, right? It manipulated higher, then manipulated lower, and now it's distributing. This is primarily, like, this is the only reason I don't like to trade as currencies, okay? Because typically what should happen is if there's a range like that, like this one, accumulation, and if it's breaking out in the direction of the drawn liquidity, it should not come down again. In this case, that's what's happening. It's raiding the sell side again. That's not clean price action. You won't seek this kind of stuff in indices. It's not. It doesn't happen. Now it seems like in the market maker model concept perspective, this is in second stage reaccumulation. So I'm expecting on Monday or Tuesday with CPI, this should really like deliver one-sided into drawn liquidity using the fair value gap from Friday. I'm sorry, Thursday. This fair value gap. Probably Monday will deliver, but we'll see. And after that, you guys, if you're trading forex currencies, you should be flat just because price will probably consolidate above the original consolidation for a while. So it's going to chop for a while. You'll require that requires SMT divergence one more time if it wants to rally higher. And if it breaks down after the consolidation, that means you might be in a reversal. GU really broke out though. That's pretty dope to see. On the 4 hour, let's see how it looks like. So I mentioned this area as a potential deep pullback, which was pretty deep because if you look at the PDRAs here, there's a CB, which is not valid just because drawn liquidity is higher. It's trading into equilibrium. So there's the order block here. From order block to swing high, it's trading into equilibrium. Some discounted arrays. Like for example, if I zoom in, you'll see it better. The rejection block right there. It's trading into there, using that as a catalyst to go higher. This is why anticipating a draw on liquidity is highly, highly important. Otherwise, you don't have a map, guys. Like you don't know whether this SIBI is valid or not, if that makes sense. You should be looking at one market one-sidedly. That's why bias is highly, highly, highly important. Bias and time. All right. Now, if you're trading forex currencies, if you decide to trade GU this week, I would say I would say look at Euro USD and trade accordingly. Meaning, once Euro takes out the drawn liquidity, close your GU position wherever it's at. Do not try to pick a top. All right. Now, but the thing is, I'm expecting Euro to get stronger here comparing to GU. Now let's take a look at the fun stuff, Bitcoin. Well, I mean, looking at the cryptocurrencies, ETH knocked out our target, original consolidation, the market maker model on the weekly, knocked out. Now, how further can it go? I don't know. It might be consolidating here before making any moves, so we'll see. As of now, though, I would not personally trade Bitcoin. I'll be focusing on ETH more just because it has a potential, it has more upside potential to all-time highs. However, I'm expecting a consolidation here, maybe something like this. Original consolidation is taken out. Now, stay above it, consolidate here a little bit, then manipulation into one of these PD arrays and rally, distribute. That's what I'm expecting from ETH, and Bitcoin will follow that. I'm expecting it should get stronger. It becomes stronger comparing to Bitcoin from here on, though. We'll see. Maybe that's a monthly fair value gap as well. So yeah, that's the monthly fair value gap. I would definitely be looking at that monthly fair value gap. So if it consolidates here, wait for that manipulation. Set your alerts and wait for that. Only monthly level. It seems like this is gonna be the first stage accumulation. So this could really rip through maybe 10K or something. So we'll see. I'm not trading crypto. So if you guys have spot back, congratulations. For the order block to be violated, the price just needs to wick above the high. It doesn't need to close it. Exactly, yeah. Because if it's an order block, it shouldn't violate it at all. But if it does so if let's say if it wicked or something, that doesn't necessarily change your directional bias. But what happens is in the event of an order block getting violated, that means you're in a deep pullback phase, and that requires another internal SMT divergence between assets. So you'll need additional confluence to for your positions in the direction of the drawn liquidity. Let me take a look at stocks. If you guys have any stock recommendations, like for me to look at something, just let me know in chat so I can go through it. But as of now, let me go through Tesla's. Oh my God, I hate this stock. It really shouldn't have violated the fair value gap, which is fine. This might be a sweep, so as long as it stays above the order block, this is the invalidation. I believe it is primed to go, or programmed to go 314. However, obviously, you should not be trading this kind of price action on the weekly without any confirmation. So your confirmation should be on either daily or hourly or 4 hourly chart, and we yet to have that for now. That's what I've been waiting for from Tesla. This is consolidation as of now, but once we have a market structure shift, or B's are getting bearish, or the blocks are getting violated on the hourly or the 4 hourly, that's when I'll pull the trigger for Tesla. But just now it's just a waiting game. It is just a waiting game. For me, this looks like an inducement to the downside, but I don't like the gaps there though. That's another thing. We'll see how it goes. I'm monitoring Tesla almost every day. If I see anything, I'll alert you guys. There's an earnings also. Let's see what is when is it? Wednesday next week. Oh, hold on. Wednesday, April. Never mind. Are we in April? Oh no, we're in March. Oh my god, I got fucking confused for a second. AMD at all-time highs. Like, this is, I don't know, dangerous to buy here. Dangerous to sell, so I wouldn't touch it. Definitely following Nvidia. That's why I was interested in the stock last year here at the extreme ranges, extreme PDAs here. So I was anticipating AMD following Nvidia, which is typical. Microsoft is in consolidation. This looks dangerous also because it is consolidating here. In the event of this losing one fair value gap, for example this one, it is in a sell model or a deep pullback, meaning if it loses this fair value gap after consolidation, it'll probably rate these lows there, use this fair value gap, and then keep going higher. This looks dangerous, honestly. And these stocks, since they're blue chip stocks, they will take down Nasdaq as well. But it kind of aligns with Nasdaq's overall outlook. The only thing I don't like is Tesla though, because Tesla should have shown strength relative to indices, which it did not, and in fact, it showed relative weakness, which is what I don't like about it. Amazon is the best looking stock as of now and the highest probability. I believe it's gonna rate 188.65 and it's getting there. But in the event of indices going for daily low, this might either consolidate for a while and wait for indices to print up close candles on the daily to run the buy side. Just be mindful of that. Because think about it, if indices are going lower and you see a Nasdaq stock like Amazon consolidating, that means the stock itself is showing relative strength. And if you're bullish, that's the sign you want to see. Can you look at DXY? Absolutely, I forgot DXY. I hate it. Sorry, I'm gonna go through DXY real quick. Cool. I remember this analysis from a couple days ago, a couple weeks ago. So this is what I was talking about DXY 2 weeks ago, I believe. DXY had a 4-hourly buy model. Okay, so this was the original consolidation on the 4-hourly, and when I looked at it, it was already completed. So price was already somewhere here. And I said one thing, this is gonna be in a consolidation for a while before making any moves, okay? So this is the consolidation I annotated, this box. And I said one thing, if this consolidation if it breaks out to the downside, that means it is going for the lows. If it breaks out to the upside, it is gonna complete the daily, which is this one, the daily market maker buy model. Now, because it did not break out to the upside, I'm expecting a lower moves on DXY. So, for example, let me clean this chart a little bit. For example, this low from January 5th should be the target. Also, one more thing to mention here, the gap on the 4-hourly chart was violated, which indicates weakness in DXY, and it also aligns with forex outlook, like forex currencies outlook as well. But in the context of, let me clean this a little bit. Hold on. In the context of market makers model stages, this is what I'm seeing right now. So this is the smart money reversal area, right? The BPR, right about there. Here was the lowest sell. Okay, this was the lowest sell stage, and then it broke lower. There's the order block right there. Here, let me just annotate it. Here, this up close candle is the order block. It comes up there. This is the first stage distribution. Now it distributed, completed the first stage. Now it's in the second stage redistribution. Now is the time for some volatility when it comes to DXY, when it comes to forex currencies, when it comes to indices, right? Because the more volatile this price action on DXY is, the better for us. Because if you think about it, this was the last 2 weeks. Look how it's range bound. And indices, it was in a high resistance liquidity run because of that. Price action was not clean. Now that it's moving, and now that it's in a second stage redistribution, now I'm expecting these fair value gaps right there, or maybe if it's like really, if it's rather stronger, it could come and test range low or wick there, and then deliver one-sidedly into the low at 101.9. Which is good for us though, for like if you're trading indices, index futures and stuff. This is what you want to see when it comes to DXY, not the choppy price action. So I'm expecting this being second stage redistribution, or one of these fair value gaps being second stage redistribution. There's an order block here as well. The up close candles confirmed order block. It shouldn't really, trade above it. But in the event of trading above it, you might require more additional confidence for the downside. I believe it's not going to violate that order block though. So let me delete all that. I believe it's going to reject that level here. Like two up close candles, both of them are order blocks. It's going to probably reject there and just distribute lower. Now here's the thing though, like this is supposed to be, this is why I don't analyze DXY. This is supposed to be reversely correlated with indices, right? But that's not the case. Usually that's not the case. Like this is the Friday's price action. It's distributing lower. And that's what we had on indices as well. So for me, looking at DXY, especially trading intraday, it just creates more confusion and unnecessary overthinking. That's my personal opinion, though. I'm not recommending that to anybody. Just an FYI. All right. Got it. Thanks. Would you not be concerned that Tesla? Let me take a look at Tesla again. Oh, what am I doing? Couldn't hold to be flipped to IFVG, shown bearish IOF, still underway. Just trying to determine where that line should be drawn with regards to higher time frame PDAs. Hello, Fabio. Welcome. I'm not too concerned about that, just because here's the thing. You'll see this on daily even better. There's a huge gap here, right? And that gap is actually acting as a high resistance run. So this being delivered to the upside one-sidedly, so ripping through that gap, was already low probability condition. So for me, what I was expecting in the first place was accumulation here, right? Consolidation, maybe like tap into that gap several times, which it did. What I did not anticipate was the sell-off, the weakness comparing to indices. But now that it's below that range, obviously it's not looking as good as I want it to be. But on the weekly level, here, it is at this order block here, right? It could, it could just consolidate even more here, and this could be a sweep as well on the weekly level. So this could be a sweep of, maybe this is monthly or something. So previous month low, and then rally, something like that. I kind of like the way it closed the weekly last week, but again, um, like looking at the indices and thinking about my directional bias on indices, then looking at Tesla, I'm like, maybe maybe this will not as good as I think it is. Otherwise, it should show strength already. But we'll see. We'll see how it goes. As long as the order blocks holds, it should rally. If it trades below it though, that's when it gets confusing or interesting, I would say, because then the volume imbalances here could be the drawn liquidity. Um, but yeah, I mean, but the order block is violated now. The sentiment has changed, right? So we'll see how that goes. If it really wants to run the highs, it shouldn't violate the OB at the end of the day. For me though, I'm looking at this as a previous month low sweep as of now. Now I want to see an order block violation, a bearish order block violation. Until then, I'm not touching the buttons for Tesla. I'm not pulling the trigger. Moderna. I remember these stocks from COVID times. I had a 10x call options. Pure gamble. Alright. You know what? I'm gonna look at Moderna with, I think, Pfizer. I don't remember the ticker though. Pfizer here. Oops, wrong one. These stocks are usually correlated, just like indices. I do that a lot with stocks like AMD and Nvidia or Moderna, Pfizer, stuff like that. So to be honest with you, Moderna doesn't look bad at all for longs. So this is what I'm thinking on Moderna here. It still requires more price action though, but um, I believe it seems like it is in a low risk buy stage of the market maker buy model. And this price action right there, which is, I mean, high probabilities here from December 2022. That high should be the draw, or could be the drawn liquidity on Moderna. And it makes sense if you look at Pfizer, there is a SMT divergence, if that makes sense to you. But I mean, I use that sometimes, just like indices. But preferably before pulling the trigger, what I want to see is, I need to mention that. So the order block is right there, right? I want to see that getting violated first. Otherwise, I mean, you can, if you want to buy, you can buy because it's a low risk buy. So your stop loss will be tighter, obviously. Um, but personally, if I was trading Moderna and if I was a buyer here, what I would do is I would scale in. So I would probably establish a starter position here first. And in that case, I would use inversion fair value gap right there. And anything below it, that would be my invalidation for the starter position. His earnings here in May. Okay. On the daily, it looks better because the order block failed right there. Now it should really rally. This looks like the drawn liquidity, that order block I mentioned on the weekly chart. Let's see. Yeah, I think this is bullish. Honestly, I believe this is drawn to 216. I like it. So what I would do is, in the event of one single BC on the daily chart, I would use that as my starter position entry. It seems like there's a confirmation here on the daily chart. Break above the high, closed it. Now it should keep going higher. I'm gonna keep an eye. Actually, I'm gonna add this to my watch list. Perfect. What did you have in mind? The monthly's what got me interested. Let me see. Let me see. Let me see. Let me see. Oh, looks like a crypto stock. Like crypto chart. Yeah, I think what's gonna happen is I don't think all-time high is gonna be the drawn liquidity. I don't think it's gonna get there, but the high from December will definitely be the drawn liquidity. What's that? Hmm. This one? Oh, fair value gap. You said here. Could be. Yeah. Hold on. Let me check. Pfizer monthly. Oh my God. What the heck are you doing, Pfizer? Fuck that, bro. Yeah, there's a potential upside on Moderna. I'm gonna be watching this stock for sure. Looks interesting. I want to see it like knocking out the low of this range, knocking out and get inside of that range, and then build that buy model, first stage accumulation, rally to high. Cool, cool, cool. I like this. What do you see on the monthly? Easy. Or what's your thought in general on Moderna? Monthly order block and inverting CB. Yeah, have the same thoughts. Have the same thoughts. I think the smartest thing to do is just utilizing the first BC on the daily below that range EQ. Then once it gets there, just set your stop at BE and let it run. If you're trading shares. Now, the problem is if you're trading options though, that's the main problem because like timing this is not easy. 217 has a strong liquidity as well. Yeah. I mean, I would also look at like be mindful of the CE of that wick as well here, just because it aligns with the BPR here, and probably the CE of this fair value gap is around the same level. Might see some kind of resistance there. All right, Snowflake. Let's see what's. Oh my God, dude, Snowflake is seems like they build sell model here, not CE. I mean, that's a fast move. It's probably gonna rate the lows. Honestly, that's how it looks like. I don't think it's gonna hold the this range here. Not even that actually here. I don't think it's gonna hold that level just because it lost already the old range. Now, what I would expect is I would expect this week to be choppy. Like for example, it'll probably print a up close candle here, a small range, and then the next week, this is what I would expect on the like 2 weeks from today. First print one up close candle and then violate its high into range low and then sell off. For a potential target, I mean, this is the problem. Too many lows here. Do I think it's gonna go all the way down to this range low? I don't know. It could. For this kind of price action, I think that also answers June's question earlier. For this kind of price action, that's when I look at the standard deviation levels of the manipulation leg or the breaker. and I would probably target that -1. I would probably target -1, which is 124. And the other one you said, Apple. Didn't look good. I checked it last week. Jesus. So yeah, I already annotated a couple stuff on Apple. Um, Apple is definitely reversing here. Just looks like I mean, the sell side from October 23rd is definitely going to be taken out. From there on, though, this is what I'm thinking. So the actual order block is this consecutive down close candles, right? That is the range. From that low all the way to high is your dealing range. Now, I don't believe Apple is in a bearish, how can I say, like sentiment or whatever. I think this is just a deep pullback. So what's going to happen is it's going to rate the sell side into range equilibrium, maybe even further down into the breaker right there from October 21st, 24th. It could bounce from there. Okay, so if it violates or invalidates the not invalidates, but like if it changes the sentiment there, confirms the pullback is over on the lower time frames, maybe daily or the hourly chart, that's where the bounce will be. If it doesn't confirm that after trading into that breaker, it's probably gonna get down all the way to its extreme, which is I don't believe it's gonna get there, to be honest with you though. I don't think that's gonna be the case. I think the breaker will hold it and send it higher. Because in the event of Apple coming all the way down to January 2023 low, like last year's low, but that would be a death sentence for Nasdaq. So I don't think that's gonna happen. But if you think about it in the context of the sell model or the pullback, the deep pullback, if Apple is going down the to its breaker on the weekly chart, that will take down Nasdaq as well, which confirms the idea of the sell model on the 4 hourly chart that we just build on Nasdaq. If you want to be a buyer, don't be a buyer on Apple as of now. At least like you can turtle soup that low. Netflix going to all-time highs. TSM following AMD and Nvidia. SQ still in. Yo, Fabia, doesn't this look like Link? Chain Link? Zoom out more. No, this price action specifically like here. Yeah, more or less. Oh, 2 years. Damn. This is gonna be. I don't know if it breaks. Yeah, if it breaks out from that range, it's gonna be aggressive. So the thing is, this could be the manipulation already. So if it breaks out like while it's one order block, maybe like this one right there, that could be a great buy. Something like this. That could be a great buy. Yeah. QS, no, QCOM. Just going through my watch list real quick. QS. Nothing here on QS. ARC. ARC's probably waiting for a Tesla so far. But this is the one I like. ASMR is a ticker. It is definitely drawn into. I've been mentioning this for like a couple weeks already. Definitely drawn into 40 level. It's probably in second stage redistribution right now. Same thing on net. Cloud Fairy Incorporate. Nvidia is doing its own thing, and that's all. All right. Uh, Facebook. Let's take a look at Facebook. I haven't checked that stock for years already. That's interesting look. One-sided. Yeah, that's true. You know what I would do for Facebook? I would just wait for the correction on indices, then buy. Because for me, I don't know how further it could go down for the pullback. I believe it shouldn't violate this range here, this range low. But what it could do is, in the event of a deep pullback, it could retrace all the way down to the breaker or these fair value gaps here, violating all of that. I don't think it's gonna violate this big one though. That would be a big move. When is the earnings? April 24. I would be watching the gap price action. If it confirms, you know, if it confirms any pullback is, completed from within that gap low or CE or the higher portion of the gap, then it could be a good buy. It could be a good buy and hold though. It wouldn't be like day trading, obviously. Let me take a look at the standard deviations here also. Monthly. Dude, this monthly chart looks insane. 534 on the monthly. So yeah, this would be a great POI for me from the monthly perspective. Something like that. It's a percentage. 38, 34, 40. So yeah, my point of interest would be 384 on Facebook for buys, for shares and stuff, and hold. Can you also check Google? Oh yeah, I had an alert on Google which was triggered this week, but I did not get a confirmation. So that was the trigger. Sweep of the low. It did. It is uh, respecting the fair value gap on the weekly, and let me delete this, delete that, and the order block right there. So Google for me looks like a great buy, and for me personally, if I long this, I would take partial at the local high and then leave the rest for, you know, even higher for a couple years. But it's at a POI right now. Like if it could flip one order block on the 4 hourly or 1 hourly, then I would consider a long position here. Even right now, this looks good for me on the hourly chart. Fair value gap violated, and it's respecting those levels from the weekly chart. Looks ready to run. It's just like the thing is, if Nasdaq wants to go lower, Google needs to show relative strength, or that doesn't necessarily mean it should run, but it should at least consolidate without losing any major level in this price action, if that makes sense. So yeah, guys, if you don't have any more requests for now, I'm gonna wrap it up for today, and I'll see you guys tomorrow in the class. And let's get after it this week, guys. I'm very pumped. I'm excited for the week. I think it's gonna be a lot of fuckery because of rollover, daylight savings, CPI, and all that. But guess what, guys? We're gonna be patient and making bread. Let's get it. All right, you guys have a wonderful, wonderful evening or morning if you're outside of the US. I'll talk to you tomorrow, guys. Take care.